Before we start today's episode, I want to give a quick shout out to Zencaster, which is a podcaster's best friend. Trust me when I tell you this, Zencaster is like the Shopify for podcasters. It's all you need to get up and running as a podcaster. And the best thing about Zencaster is that you get so much stuff for free. If you're planning to check out the platform, then please show your support for the Founder Thesis podcast by using this link, zen.ai/founder thesis. That's zen.ai/founder thesis.
Hi, I'm Mukesh Kalra here, and I'm the founder CEO of InMobi.
एक मिनट रुक जाओ, रेडी होने दो. चलो ये कर लेते हैं. This could be a great intro.
Indians are amongst the highest savers in the world, but the way in which we save is changing. The trusted financial advisor who used to help our parents save is now replaced by a plethora of investing apps. And one of the biggest apps for investing your money is ET Money, which helps Indians manage more than $3 billion of wealth. Mukesh Kalra, the founder of ET Money, talks to Akshay Dutt about starting up, failing, and starting again. He shares his insights on how to scale up using a product-led growth approach without burning crazy amounts of money in marketing and their path towards becoming a highly profitable unicorn. Listen on to the decade-long journey of a fintech pioneer.
We started selling phones, and then we actually figured out that selling phones to companies is like great. And because they have a larger requirement of phones, and there we actually, so that was probably my first startup, and it was quite crazy, and probably the first startup turned a profit. So that's how we actually got into building business.
So why didn't that become a long-term gig? Why was it like just a short-term gig?
Probably getting into MBA became like a very natural thing that first we do that, then figure out a way to build a business.
So what did you want to do during your MBA? Like finance, sales, what like?
So it was marketing and finance. And so first job then was with Future Group and like a management trainee program, which is the usual one. They send you everywhere. I was managing the store at Nasik. I think that actually formed a very strong understanding of consumer behavior, frankly speaking. It was not very deliberate. I thought that let's see how it actually pans out. And the way the consumer behavior actually evolves with like small incentivization, and how if we used to announce offers on like you have a 1,500 bill and you get like 1 kg sugar free, like, and if you do the percent calculation on that, it's like 1% off or 5% off at max.
Yeah.
But the fact that it is like 1 kg of sugar is coming to be free, right?
It feels substantial.
It feels substantial, right? And then how do you bundle those products together? How do you actually, so we used to announce an offer on say a category of say clothes, right? Like, or shopping. And suddenly you could see from the top that how the whole movement of consumers inside the stores is rushing into it. And then you move, it's very like amazing to actually, so it actually gave me a very good insights into looking at how consumer behavior gets shaped. I think that's the best training ground in retail to actually do that. And then I figured out retail is not great for me personally. And that's how I got into Nielsen. And that was more on the consulting side, doing research, quantitative research and qualitative research. And there again, I think one of the biggest projects that we did was with Google. And that actually again brought me back into the whole world of internet. And that was an amazing exercise, because what Google was trying to do was, where are the next 100 million users are going to come, right? So that was like a very big exercise. And post which I decided that...
So this was like a project management kind of a role that you were doing, like managing that research project.
Yes. And also actually kind of a full-blown recommendation into where the users will come from and all that. So end-to-end project was there, and it was fantastic because it combined consumer understanding and also how internet is getting used and everything. And that actually led me into saying, okay, probably this is the space that I should be in. And that's how the whole journey into the startup world for me started. And
so InMobi's first product was not the ad platform, right? Like
M-Coach, yeah. I was the one who built it, M-Coach. So it was amazing. Like
just a product that was the version 1, right? Like
yeah. We said that people don't know the deals that are running around their locality. And SMS is a great way to, at that point of time, SMS was great. And then people used to actually ask for it. So we had a SMS based platform to search, hunt for deals, right? And it bombed like big time. Like, and we found that everybody bloody knows the deals around and they don't want to actually know it upfront. Then the fun is in the chase of the deal than getting the deals. But I think one big learning was that how wrong can you go, right? With your, or probably, the shots that you have to take, it can actually be like go down. And the second one was the shift. I think the biggest learning there was that if you're decisive enough in that situation, which the team at that point of time was, to actually pivot the whole business and become ad network was, I think, a learning of a lifetime. Because like August, we decided, September, we said that, August, we knew that this is not, MCOJ is not going to be the thing. September, we decided that we are going to be, mobile ad network, and SMS was just one part of like the whole thing. Earlier plan was like that. SMS is one of the ad formats, and then you actually shift to online. And in December, we were ready with the first version of the product. And the only insight was really saying that there is a company, AdMob, which Google acquired later, that was doing like 300 million ad impressions a month from India. And we were so shocked that, and they used to publish reports by geographies to our work, how many ad impressions are happening. And we were shocked that there is already a business out there. And that actually got us thinking. And, and the whole team was, I think, very, very decisive that that's the pivot. This is what we are going to do. And this is the timeline that we have. And immense learning out there. And there is a funny story around that also, is that, so what happened was, when this transition was happening, we did not have much money remaining in the company because we had spent all of it in our previous shot.
They must have raised just like a small friends and family
seed round from movie agents. And then we stopped drawing salaries, and Naveen came and said that we cannot give you salaries for a few months. And we said that, okay, we are into it, so better be into it, right? And then after 3 months, Naveen and Abhay said, we need your credit cards as well. Okay. And I said, you no salary, and then you're taking away our credit cards also. But I think, it was very like a shock. And I think we got bonded so well because of that in those instances, right? And we were like all in, like, credit card also take, we'll figure out. And we knew that it is a short-term thing, and we will figure out something or the other. And that was insane. And so, and after that, it was quite a turnaround. Like in the first 6 months of launch, we actually became very big. We ended up raising, InMobi ended up raising a big Series A at that point of time, was from Kleiner Perkins and all that. And from there, the journey was like phenomenally there. So I was there for 3 years. A lot of fun, great learning to actually, from zero to actually, 2 billion ad impressions a month to almost $50 to $100 million of top line. And then from, say, 5-member team to almost like 300-400 member team. So that actually was, I think, a very compressed learning time for me personally. And probably that gave me the confidence to start my next venture into the financial space. So I continued to head the product piece.
Okay. For the buyers of inventory or the suppliers of inventory?
So I was on the demand side. That's what we call it, the buyers, the advertiser side. Right. So the demand side, and then there is this whole network component, the pricing engine, to ad serving algorithms, to matching the inventory. It's like a very, very deep, interesting ball game, right? And to build a network, because it has this demand supply matching, then no fill rates, all that. And there are like tons of stories around it, right? So we can go on and on. I think it will take a lot of like, how do you actually build a business? Like we were always kind of like there used to be these mobile Mondays, right? At that point in time, where people used to talk about mobile, how mobile is becoming big and all that, right? And we were the guys who were saying that there is a mobile ad network also, which is trying to match, like, put ads inside mobile phone. And people used to say that there is no content, only what are you guys doing? Where are the ads coming?
That was like the 2G era, no?
Yeah, the 3G era. But, it was like VAS related, right? At that time. And we used to always get mocked because we were building a category out in the market. We could see the opportunity, but a lot of times it happens, right? Like as a team, you are very clear about that there seems to be a very strong opportunity, and the whole world is like questioning it, right? So it's part and parcel of a category build up at that time. So 3 years into InMobi, and phenomenal experience, and then that gave me the confidence that we can take our own shot at one burning problem which has been close to our minds, which is in the financial space. And that's how we started Money Sites, which we ran for 3 years, which became part of Times Internet.
So how did that become a we? Like, who is we here?
So Santosh and myself have been through and through along together. No, he has been my engineering batchmate to like through and through journey. So we have been together for like donkey years, like 16 years now. And so Santosh and I actually started Money Sites with probably the same vision, mission, problem statement that you can talk, that we can actually, that we are today also solving at ET Money. And yeah, so that's how the journey into the financial space, fintech, actually started.
What was the vision? Like what was the thesis when you started Money Sites?
So if you really look at it, even today, for people like you and me, more retail oriented consumers, the financial life or the decision making cycle, right from which products to buy to the whole piece of how to do a transaction and post transaction of how to managing, because financial products are not like one-off purchases that you can just buy and you use it and you are kind of instant gratification. You're actually buying into a product which is for a long duration, long time. Like SIPs, for example, in ET Money are like perennial in nature. So if you really look at that cycle, there are huge amount of frictions, and it leading to like a worse outcome for consumers. And that actually became, and we came from the world of technology, we came from the world of mobile, and we said that we could actually apply our understanding, our deeper understanding on this to really problem solve these friction points on a continuous basis. And then there was this whole, another thing that had happened at that point in time was there was a regulatory change where the commission for the agents at that point of time, which were there in the space, were cut to like 1/3. And which means that now there has to be a much more stronger, efficient way of actually, connecting consumers to the products, right? And online and became like a good solution to that. So, and I think that has been the continuous thing, that how can technology help our consumers or Indians at large to fix their financial life. And
like way back, like 2009 is when you started Money Sites. I mean, none of these enablers were there, no? Like even something like a payment gateway must have been like a challenge to set up. And so tell me about that launch journey. Like what were the things you needed to, assemble to actually launch it off, and like that 0 to 1 journey?
yeah. I think the first one was to actually first assemble the team, which is, I think everybody has to figure out a way to actually get it going. And the whole thing was that how do you actually conceptualize the whole problem statement well? And there we actually drilled down, created a very strong experience layer in terms of how today. Then we fixed the whole statement. Like financial life is a huge problem, right? Like it is very abstract in nature when I say financial life. So we actually said that, okay, there is a part of life which we should be starting with, and that was wealth. And that's how we focused sharply on mutual funds at that point in time as well. And we said that this is the best financial product for any retail consumers to start growing their savings. And then we created like a full first level was to actually, getting a team. One part was that because till the time we don't raise money, it becomes challenging to get the team. So we had few people on the, working with us on a part-time basis. We then got someone to do prototyping for us so that we could raise money. So we did the prototype, we raised some money. And that's how, so Bloom Ventures, like Karthik, I think they were also starting at that time. We were probably the second check or first check of Bloom. And Bloom was there. Then there was an angel investor, Prasad, who was MD Asia Pacific for IBM at that time. And Naveen himself had invested from InMobi. So I think we had a good bunch of very strong board in that sense.
And how much did you raise in that seed round?
We raised $250,000. So it was a good to actually start with. And then we actually built the whole platform with the whole thing that users can come and start their journey of understanding the products well and all. But what happened was that while we had a good,
Was it like commerce focused? Like users can come, compare, and then buy? Like that was.
yes, it was also decision making focus that you could actually understand a mutual fund. Like there continues to be that battle of so many mutual funds at that time. Also, it's the same companies with so many categories of products. And how do we actually help people make a very clear understanding what is a good one and what is a bad one? And then we
And how did you like have the mutual fund tie up? Like, was there like a distribution broker or an agent through whom you making these available to consumers, or did you like go and get that in relationship?
Yes. So we had to actually do like integration with the mutual fund companies, right? And the good part in the mutual fund space is that there are central companies which for order processing, right? So all the mutual fund companies actually have, for example, CAMS as one of the companies which handles their whole order processing, right? And settlement and movement of units and everything, which are called the RTAs in the space. Similarly, scams and carving. So we would actually first tie up with the mutual fund company and then integrate with CAMS. And that's how we could actually make a transaction happen online at that time.
Yeah, okay. And you would get that distributor commission. That
We would get the distributor commission. Yes. And that's how it actually was planned. And like multiple iterations around it. I think we checkboxed all the rookie entrepreneur mistakes that you can think of. Like we were getting money when we were looking to raise at that time from two people, Sequoia and India Quotient, and we said no, we want like 5x of that because we need our plans are bigger and all that. So I think some kind of these, and then it did not materialize to the point that we wanted. Then whole point of rapidly scaling the whole thing and getting the team quickly onboarded, with and like we learned a lot about really ensuring that people understand the finance bit. Like we could get people very easily, but we underestimated the complexity in making people understand who is building the product or designing or coding to really get them into the groove of this. And I think so tons of those things that we could have done better. But I think one big learning at that point of time for us was very clear that you might have a very strong team, a great product, great sounding board, would have raised more money. But if you don't have market power with you, it's just if market power in that equation is zero, then everything gets multiplied to that market power. While a lot of consumers were online, it's not like people weren't online, but the whole transition of the whole market or consumers wasn't towards doing highly involved transactions. Right? So that was one. And then we said that why don't we actually go to and tie up with people or companies who have a huge base. And that's where Times Internet came into the picture. And we said that we have this great product platform. You have a huge consumer base, and we could do a strategic partnership where we start to power the content ecosystem with financial services. And that was our larger plan, was to actually move into larger space of multiple things on the financial life side. And eventually what happened was Times Internet actually started liking the team, the product and all that, right? And then the whole acquisition happened. And then it took a lot of time, frankly speaking, for it to happen. And in between, like it took like the first short was there, and then we were not on page. Then we said that, okay. And during that time, we had lost all the steam, frankly speaking, in terms of running the business. So I joined back InMobi. So Naveen said that why don't we come back? And was there for 2 years. Then it was a stale company. And on the side, we were trying to figure out what to do with money sites.
But was it still transacting? I mean, were people still transacting through it?
Yes. So it was there. We just kept it on the back burner because and it wasn't
Autopilot.
It wasn't thriving. Yeah, it was on autopilot. We were trying to figure out what to do in that sense. And then after 2 years of the whole discussions and all that, Times Internet, Satyan said that why don't you guys come over and start and all that. So that's how I came in, and then we started the whole ET Money. So, and as part of me coming over is where Money Sites also became part of Times Internet.
So because the product was ready, so like the go-to market for Times Internet became super quick.
Yes. And also I think it was about actually also getting a team in place which can really 24/7 focus on the fintech space. And the good part was that like I had two options, frankly speaking, to go with Times Internet or to actually raise some money. Because now after 2 years, the market had actually become far better, right? The consumers had actually 2014, consumers had actually come online. A lot of things were starting to actually come back to the point that we wanted. And it was a very interesting decision. And I think a lot of people could probably take cues from making those decisions as well, is to, eventually, I think when you're doing a startup, it all boils down to increasing the chances of success for your startup. Because when you're starting, 3 out of 100 startups actually become like a huge companies, right? So when you're starting, the odds are actually stacked against you, right? Now, how do you take that 3 to 30 to 70 to 80, 100 is how one has to look at it. And so one option was to actually raise some money, try to figure out, and then build it out. The other option was to say that, okay, what are the most important success factors in the space? One is trust. Second one was captive audience. Third one was a long-term, what do I say? Understanding that it's a long-term business. Like no financial services company you would have seen is built within 50 patient capital, and also a longer term horizon to everything that you do. Right? And so those things were actually really fitting well with Times Internet. We could actually go to market faster, iterate faster without much capital required, right? And a longer term horizon that, okay, it makes longer term alignment in the sense that this is not like a 5-year, 7-year gestation. This is going to be at least a decade long shot, and only then it will become. So, and then the another important aspect was to ensure that there is complete entrepreneurial freedom, which ensures that you are building it without any constraints or baggage of it being content led or it being differently. So that actually really, all these 3-4 things which are important for making a financial services business or fintech business successful were actually fitting. So it was better.
So like in a way, this is again like a 0 to 1 moment for you, right? Like because when Times Internet acquired you, you had like a basic product in place with those like the connections in place in terms of customers being able to transact, but no traffic as such, right? Like not too many transactions. So then what did you do next?
So we've been taking multiple shots, right? We started with saying that, really focusing on mobile first as a very strong focus area from 2015 onwards. And we said that we continue to focus what we understand better and where our edge is, which is where wealth orientation again from. So all the learnings we had during Money Size Days, we brought into ET Money, and that's how we actually started to build the whole thing out.
You were telling me about you decided to be mobile first, like focus on mobile. That was one thing.
So I think the underlying philosophy of building ET Money has been more is the underlying, I think, philosophy or the problem statement still remains at large the same. For mass retail consumers, there's still the friction of whether to take friction or around the whole financial life or the journey is very, very high. And how can we make consumers make more informed decisions? And when you start taking better decisions towards money, you become more confident about it, right? At the end of the day. So that's the underlying philosophy. And then we actually started building towards this. Started with the mobile first. We saw that everybody was porting from just to web to mobile at that time. And that actually gave us a very different angle into creating a string of innovations. Is when we said that, okay, if we have to impact like at an India level, if we have to enable consumers to start investing, then we need to solve the onboarding problem, right? And how do you solve the onboarding problem? Because there is so much regulation around KYC and all that. So because we are mobile first, we could use the whole selfie feature to do a video KYC. So we were the first company in the space to actually do video KYC. And that suddenly became like, and then we piped the whole, you could actually start investing literally within 30 seconds to 1 minute, depending on whether you're KYC. That became like a big growth engine, because then almost 70%, 70 to 80% of our users were new to investing.
Before this, how did you do the KYC? Like the person would have to courier some document, or like what was the process like?
Yes, so somebody had to actually go take the documents, verify that they are there. They are like, so there is this in KYC. There are two components. You have to ensure that there is a proof of identity, there is a proof of address, and there is a liveliness check that the person is actually alive. So all these three checks, and then the documents that are provided are actually originally seen and verified. It's called OSP. Like, so you actually need a person out there to do the KYC, literally, right? And all of this because we could do on mobile, and now it has become like obviously everywhere it is like paperless. So the completely paperless transition to actually, what was a very high friction way of starting to invest. And probably one of the biggest reasons that people did not actually, even if there was intent, they were not able to invest was there. And then we actually looked at how do we ensure that people are able to create SIPs faster, right? We actually launched something called as Instant SIP, where you could actually set up an SIP within 30 seconds again. We were one of the first few guys to actually ride on the UPI thing to enable transactions in mutual funds on UPI. Then a recent thing came in on Aadhaar. So we were the first company to do Aadhaar based SIPs. So I think a full focus on ensuring that we solve for the the ease of transacting, or was one string of innovations which actually helped us keep on growing. The other set was on the whole thing of how do we help even make better decisions, right? So we have a product called a report card, which helps you as consumer understand a mutual fund, and it reads like a English. It is not like dense, where people think it is very tough to actually understand. And whether a mutual fund is good, bad, ugly, you could actually understand it. And it's the other thing that we did was that while technology can really remove the frictions, right, it can increase the transparency to be very, very high, right? And that ensures that we actually have been very clear that everything that we put out on ET Money has to be backed by data. So even if it is a report card, you will see that it is so well backed by data that you not believe that it's fact based, right? So there is zero bias in the whole product itself. And so it's been a string of theme of products which are around helping you make stronger and better financial decisions by simplifying. And if you really look at it, there are 2 or 3 big underlying principles. One, at a very macro level, if you look at India, there is still $1.2 trillion actually sitting in savings account and deposits. The rate at which the financial assets, for example, savings account, deposits, equity, is growing at 2x the rate than physical assets, which is real estate and the likes. And that is actually, which is called the financialization of assets. That's happening at a very big level, right? And if there is so much money that is lying, that is moving to financial assets, and a huge portion of that is actually inefficient, right? Because my favorite dialogue to everyone is always about savings account is a sure shot way of losing money.
Because of inflation.
Okay? So your inflation is eating on a daily basis. It's not like it's like a 1 year phenomena, right? And you imagine that at an India level, such a huge amount of money is just sitting idle in the one of the most inefficient places for it to grow. And if you really look at, we are a $3 trillion economy. We aim for becoming 5 trillion. 1 trillion is lying inefficient, right? So there is this huge impact that can be created, right? So that is at a very macro level. Now, the other thing, core principle, is that consumers, like retail consumers, are actually in a state of, or are stuck in a loop of misaligned incentives. So what do I mean by that is, you look at all the service providers who provide you financial products, right, actually fall into 2 large categories. Either that service provider is commission-led, right? Or that service provider is transaction-led. And when I say commission-led, that means that service provider is making money off commissions, right? And when I say transaction-led, that business is making money by charging you per transaction.
If you like to hear stories of founders, then we have tons of great stories from entrepreneurs who have built billion-dollar businesses. Just search for the Founder Thesis podcast on any audio streaming app like Spotify, Gaana, Apple Podcasts, and subscribe to the show.
What is an example of this transaction led?
So transaction like brokers, for example, right? In the wealth
Yeah,
space.
yeah. When you're doing equity.
So when you're doing a transaction or doing trading, for example, you're charged on per transaction, right? And in mutual funds, a lot of people and regular mutual funds are there. So we said that this, if you really look at it, both these approaches are actually not really bothered about what is your financial outcome. They're not aligned, right? So a commission-led player will always keep on selling you products which have higher commission. And everything said and done, the business optimizes for revenue maximization, and you cannot really at scale. You cannot really stay away and say that, "Nee, I will be great to you, but I will make less money." That's like, I think it's a false alarm for consumers. And then the transaction-led ecosystem also does the same, right? Because it will keep on, the whole ecosystem actually drives you to make more and more purchases. Because if you do more purchases, more buy and sell, then you actually make more money. And in this, again, whether a transaction is profitable or not, is not really, nobody's caring for it, right? Whether you're reaching your goals, nobody's caring for it. So I think there is this whole ecosystem which is not really aligned to consumer outcomes, right? I think that's a huge, and when that happens, and that is the biggest reason, I think the breeding ground of mistrust that we keep, every fintech company or every company wants to say is that we want to solve for trust because there is so much mistrust. I think the reason for that mistrust is the ecosystem, the way it is approaching the consumers. So we said that there could be a third way to actually create a much more impactful business by aligning ourselves deeply to consumers. So we said that in mutual funds, for example, we don't take commissions. We offer products which are direct plans. So as a consumer, you earn 1% higher returns. So imagine that the commission that was going to an agent, that is getting added to your returns, right? It's like that. And that gives you higher returns by its very design, simple. You don't do anything, just convert your regular mutual funds to direct, you are actually 1% up, right? And then it compounds like a huge sum on a yearly basis, right? And that was, and then we also don't charge for transactions. So it's a completely free platform.
But you're not doing equity, right? But the transaction is only for equity.
We are not. No. So even for mutual fund transactions, right? So you can come on ET Money, decide which mutual funds to buy and do the transaction and manage the whole life cycle, right? So that's one large. So we disrupted the whole commission-led ecosystem in the mutual fund space. The confidence that we've got is from the consumer love that we've got, right? Which is because we took that hard call and aligned ourselves to consumers. What it does, it makes us completely unbiased, right? As a platform. We never push you to buy a mutual fund, like a specific mutual fund, because it doesn't make me money. Why would I? So I would, as a ET Money company, we are always so geared towards giving you the right solution, which is completely unbiased. So that actually that solves for the trust problem head on. And if you really look at it, has it worked? At least from the numbers that we've got up till now, it clearly showcased that this is working. For a simple fact that today we drive close to 600 crores of new investments, mutual fund investments, every single month from the app, right? So that's close to $1 billion of new investments happening from one single app. We help consumers actually manage $3 billion of their own investments from the whole platform, right? We have close to we were the fastest company to reach 10 lakh SIPs a month, which leads to close to 250 crores of SIP every single month. Now, while these numbers are great, we are proud of it and all that. But for us, what it signifies is that people trust us with that much money, right? That means we've nailed the problem of at least trust in the space by ensuring that we are providing that kind of experience, which is completely unbiased. And I think so that's one piece that actually then we added, more products which are like NV.
When did you pivot to direct plan?
So that was in 2018.
And how are you monetizing? How are you making money to meet expenses?
Yeah. So we started with mutual funds. Then we actually have been iterating around other products which are part of your financial life, which is insurance and lending. So we have been iterating around that. Those two products we don't promote outside, but they are actually part of the solutioning itself, and we make money off them at this point in time, which is a cross-selling business.
Okay. So mutual fund is like a customer acquisition tool, essentially. Like you get the customer in by offering a direct plan,
Yes.
You don't make
yes.
money there. But once the customer is in the ecosystem, then there are other opportunities to serve
Yes.
his needs.
Yes, yes. And the great thing about being wealth first as a company, right, is cashbacks are not allowed. So I cannot give you money to actually invest. That's like, I think the best thing that has happened because otherwise what has happened to people who have been giving cashbacks, right? And so literally what does that mean is if the users are incentivized to use the platform, they have to see real value, right? You will, and if that means whatever products we have put out on the table for the consumers are actually working for a simple reason that they're finding a lot of value, right? So I think it's the second thing that a wealth first business does is it automatically has a good grading criteria of high quality, right? So people who invest are actually people who have saved money, right? And they have money and that's why they are actually saving, right? So it's not like you're going to people who don't have money and then giving them money, which is lending, which is a different ballgame model. So here you're actually having a very strong audience, which is actually high quality. The third thing that it does and has done for us is there is a huge retention that we have been able to get for our consumers. So people who have transacted on ET Money once, their yearly retention is at 94%. So I know that once the user is there, that user is going to be with us for a long duration, for a very, very long time. Like if you do the math, then it is almost like 10 years because yearly only 10% of the users are going. So over only 10 years, all the users will be gone, right? So I think that I think is a huge advantage. And once we know that there is the consumers are coming high quality and they're high quality and they're retaining, we can actually then go into the journey of solving their other aspects, which is what are the needs. So like our whole buildup has been more audience led, I would say, than so to say a shiny toy based thing. Acha aaj lending chal raha hai, lending laga dete hain. So, or today now neo banking is the new big thing. Can we actually attach neo banking to? So I think it's more about what the consumers are guiding us to build. Like when we are iterating around insurance, we are not making insurance like a typical sell. What we identified is that a segmented approach to insurance is much better than actually a direct sale. It actually focuses the whole effort to say that based on your profile, these are the set of insurers that make best sense for you. And this is how the whole journey starts. So it becomes more and more customized.
You're able to do a more personalized recommendation
Yes,
after
yes,
understanding the use
Correct.
case.
Correct.
Got
And
it.
then similarly in lending, we found that a lot of users were actually 3 out of 12 times in a year, right? With 3 months out of 12. There was a gap in terms of having money in the last week. So which means that we need to not have like personal loans tapped into it, but actually having a solution like a credit line or a
early salary.
or for that matter, can we actually how do we enable a user to actually have very small ticket sized loans, which can be given back very, very fast? And to actually keep on doing that multiple times is very painful, right? Like, and you go for taking a loan, it's like an exam, yeah.
Yeah.
So we actually then said that, okay, we understand the profile, we give you a line of credit. Which line of credit is where you can just dip into whenever you want a 3,000 loan to a 5 lakh loan, you can actually take and pay back the way you want it. It will be. So it became like, so the larger point that I'm driving is that all these are iterations, experiments that we are doing and all that. But it's more what our audience are actually need. It's more audience driven than market hype driven. And that has served us well. And now the journey for the future is more exciting now because we have this huge consumer base. We have people who love us and are retaining and transacting like regularly on our platform. We have solved for a lot of problems on the wealth side. The transition is now about saying that what is the future landscape or future that is happening and that is going to happen. And if you really look at it, the whole part is around like transaction is the whole thing around doing transactions or enabling transactions is like becomes a commodity over a period of time. Like, the way you would do a transaction on, say, a Flipkart versus Amazon is more or less the same, right? But the real value for the consumer is always about what happens before, which is helping the consumer decision. The second is about post-transaction. How do you actually manage, right? And we actually deep dived during the whole understanding the consumers to what are the next level of problems that the consumers are actually, and that consumer deep dive actually threw like really amazing insights. Right. One was that I think the whole COVID piece and lockdown actually has a huge impact on how people look at money. So what we found is that COVID really forced people to look at their own lives in a very different manner. Right? Like I want to live a life differently because there is no certainty of what can happen. Right? Like I could die anytime. So might as well. So there is this whole self-realization that has become huge in the segment, right? And when you want to live life on your own terms, the number one question that you ask yourself is, do I have enough money? So we are seeing consumers, going away from that fixed mindset. Okay, I want to just do like study, get married, buy a car, house, and then retire. And all that is actually thrown out of the window now, right? There is this amazing sexiness about disproportionate rewards, right? Like
retiring at 30.
Retiring at 30 and saying that retiring at 30, not owning assets, right? Which actually curtails my freedom. So people are preferring renting, even if they can afford a house or buying a house, right? Like people are preferring to go on travel experiences more than actually saying that I want to own anything. So I think there is this whole change in terms of how the whole thing, and in this whole change, there is this evolving mindset, right? Which is what is actually triggering and making money center stage, because now money is being looked at as an enabler for those aspirations, right? That if I don't really think about it now, 5 years hence I cannot retire, right? It's not possible only. It's impossible. So suddenly money has become so center stage, right? Into our decision making and this, which is great. And that's why you see like there is so much inflow of consumers, inflow of retail investors to wealth creation, wealth space, right? And this is like a permanent behavioral shift, right? Because once you have, वो बोलते हैं ना कि दिमाग की बत्ती जल गई एक बार, then you will go. It's like that, right? It is happening. And that's why you see so many people coming and investing, right? So I think that's a huge, change that is there. But if you really look at it, it is actually also leading to one big problem, which is like every product that is being thrown at the consumers, right, is getting lapped up. And what happens in that is that it's great because the industry grows really well. But, fast forward 2 years, if you invest and started investing today, fast forward 2 years, if you bought like 6 different products, like 3 stocks, 5 mutual funds, 2 cryptocurrencies, if at all, right? Or there is this InVITs, there is bonds, there is like so many products that have been actually lightened up. It actually leads to a very big problem, which is about how do you then manage, right? Because addition of one product into your bouquet doesn't actually increase the complexity linearly, right? And one product versus 2 products versus 3 products actually become like, it's an exponential, it increases your cost of managing really, really large. Cost of managing is one. And when I say cost of managing, it's more complexity, right? That how do you now actually kind of, like what that leads to is then a state of full confusion. Like if you have so many, like a simple question of, I have more money, where should I put now? Should it be this stock, that mutual fund? Or how do you do that? There's this confusion, right? If you have to remove money, where should you remove money from? Like the market is up, should I be doing something to my portfolio? If the market is down, should I be doing something? So like this state of confusion is also rapidly increasing with the inflow of users and as more and more products are being bought.
What's your customer acquisition strategy? What does your funnel look like? And, how has that evolved over the years? So when you started off in like 15, 16, at that time, what kind of monthly customers were you acquiring? Was it by virtue of Times of India's news websites? Were they the main drivers of traffic? Or so tell me about that.
Yeah, I think first 2 years, it has been largely Times Internet led. And actually also because the product experience, the reliability of it, the unbiasedness of it, the whole proposition of direct plans, right? Actually ensure that we have a much more stronger word of mouth, right? And that has continued to be very strong because we perceive to be a much more stronger brand in the space. The product experience ensures there is, see, trust is also about not having surprises during the experience, right? Like reliability of it becomes like that. So I think that has ensured that our customer acquisition has been always more organic. So if I do a cut of our customers acquired through organic channels, which is not paid channels, versus paid channels, it has continued to be 70-30. So 70% of the users are actually getting acquired via either word of mouth or referrals. So one user referring other, and the thing is that in all this, you cannot incentivize the user, right? So there is no way to actually kickstart till the time you continue to provide like deep value. And that ensures like our overall blended cost of acquisitions are much lower, right?
So something like say if like in the newspaper, the Times of India newspaper, if there is a ET Money promo in that goes into your organic channel or your paid channel? Like
It goes into a paid channel.
there's no free ads.
There are no free lunches. So and I think it's also from the way to look at that is that Times Internet and the whole ecosystem is still one of the channels, right? And for Times Internet also to promote ET Money at a lower cost versus actually looking at other options of other advertisers, there is this understanding that it has to be at a price at a market rate, because otherwise like Times Internet is losing, right? In that sense. So I think there is this clear understanding of keeping it at market rates. And the good second order effect of that is that we really build an independent company, right? Like what happens tomorrow if we are not able to use the media, right? Suddenly that becomes like a big challenge, right? So I think, and that actually made us really think hard or build like crazy amount of growth stack, like our growth stack in terms of driving users right from once they install the app to sign-ups to doing the ban check, KYC and everything is I think one of the best in the space, or probably in India. Like there are 40 to 50 individual journeys that get triggered once the user comes in. So for example, when you as Akshayas come in, based on where you are, what kind of information that we have about you or the system has about you, and what are the possible interactions that you're doing, it keeps on giving you a completely personalized way of moving you down the funnel or moving you to the next step.
Mm-hmm. Like you try and predict what product will interest me, whether I would want to do research first or what. So
multiple things. Like one is that if we know that there's an intent to actually say invest in a mutual fund, right? And you've shown an interest in actually looking at a certain type of mutual funds, then the home feed that you see on the app is personalized with that intent. Right. So that's where the first layer of our whole focus on personalization started to come in.
So what does the app look like? Like what do you mean by a feed here? Like, I mean, I thought an investment app would straight away show you a dashboard and like what is the value.
So I don't know. You have to go there. So what it does, it actually first gives you a dashboard of where you have invested into what products and what is the profit loss and what is the value. Then it gives you a set of cards, right, which are hyper personalized to you as Akshay. Like if you're looking to actually understand more about mutual funds, you will see a video, which there is this another loan initiative that we have, which helps you actually get better at investing. Like one of our YouTube channel, for example, being a brand, has close to 300,000 subscribers, 3 lakh subscribers. And that is on the back of not doing any sensational stuff. Like there is no news, there is no stocks. We don't talk about stocks. We don't talk about IPOs. We don't talk about themes, right? So imagine that all the clickbait that is possible that we have actually removed, right? And I think it works because we understand our audience really well. We understand that the audience wants to learn about investing, how to make those smarter decisions, right? And then because that has the action can also be taken from the app itself. It just bridges the gap from, okay, I understood this. Now I can actually implement it there. So the whole journey of realizing or working or learning to actually implementation is like really short circuited, right? And that gives you a very big high because you could implement it, right? Immediately. So, and the other underlying principle has been that we'll not do anything which is not really helping people take that informed decision. Like smarter decisions has to be a core philosophy into creating that content, right? And that actually has helped. So now that content becomes whatever we have, that engine becomes part of your personalized feed.
Okay. And that could be like a report on a mutual fund, a video.
Yes, a video and
like a blog or an article on like to learn something. Okay.
And
or even an offer for a loan, or like products also could be part of those cards.
products could be, yes, products could be part of it. But I think it's a function of like the whole challenge is if we actually push you products, right? Then we know for a fact that doesn't work. Like if we are after you to buy insurance, it doesn't work. Like that we tested out and our test very. So it's a very till the time it is not personalized, you're not going to interact with the feed, right? It's like you're used to actually interacting with the feed of cards or feed when it is super personalized, right? And it actually solves the intent that you have come to the app with. If you're not come with the intent of buying insurance, even if I show you like the first block, you will not go for it. And it's a negative experience. It's a waste of energies, waste of I think a very important moment for us on the system that the user has. Like every minute that the time is spent has to be moving towards making.
So most of the feed is content then, like 80-90% would be content.
Content is there, then insights are there about your portfolio, right? The third thing is about there are insights like what is going wrong. We launched a product called Portfolio Health. So what you could do is you could import all your mutual fund investments that you've done till now since 1990s and see how they have performed, and it's first see it on one single screen, and then you compare their performance, insights, and all that. Now, if there is anything wrong that is growing with your portfolio, the Portfolio Health as a product highlights those problems. That are you over invested in say small cap stocks, underlying stocks, right? So if you have like 100 rupees or 1 lakh rupees into 5 mutual funds, and you have like a huge portion of small caps, then you are actually you need to actually do something about it because the huge amount of risk is sitting on it. So it actually gives you a lot of these insights, which again are very exciting, not to be found anywhere. And that engages the user, solves their and makes them more smarter again, right? On making decisions about investment.
Okay. Do you get user data from other Times apps? Like if I'm using Economic Times, will that help you personalize your app more?
No, first is we can't get data for a simple reason of data privacy, because I think that we have stayed very clear and ensured that neither do we share data in that sense. And because I think there is data privacy that is important. And when it comes to money related data specifically, it's all the more important, right? So I think we have stayed away from creating a layer of data exchange between. So, and it actually kind of works pretty well because I think the whole data set actually is getting utilized in the right context at all points. I think at the moment it becomes like federated also everywhere, then I think the whole problem around data has always been about, can you actually really use it for providing any end utility to the consumers, right? Unfortunately, most of the data that people actually want is to sell you something, right? Kiya, acha, I know these 5 things, then you are a very high probabilities buyer of this product. But I think that is a very limited utility of data. But the real utility of data is to actually give you a positive outcome from the data that you're providing. I think we are more geared towards that than actually kind of doing that. And then because of our product of portfolio analysis and health, right, where you could import the portfolio and this, a lot of users actually also bring their portfolios on the ET Money app. So that is another.
What does that mean? Like bring the portfolio or import it, or like what does that mean? Like, does it mean that you are now the intermediary through which they can sell it? Like, is that what it means?
Yes and no. And you have to do something about it. Some process is there so that it becomes part of our AUM, or
like there's some migration. Like if I bought it.
There is a migration. Yes, there is a code migration that you have to do, and then it actually will be counted in our. But what it does, it actually, to the end consumer, it is a huge advantage, right? Like you can bring a lot of people have invested in mutual funds in like 5 years ago. When the whole tax season comes, everybody starts to, everybody will come in and then say, "Ki bas ELSS mein dal do," and all that, right? Or put in this fund, that fund. And that person is then vanished. So the product vanished, right? And then now you don't know what has happened to that. But the good part or surprising part of pleasantly surprising aspect of our product is that you get to suddenly see the lost money. Like it's like that dollar, that money that you're not seen and suddenly visible, right?
Can you like enter your PAN or Aadhaar or something and then therefore see what all investors?
Yes. So we have the beauty there is that you don't have to actually manually input anything.
Okay. Got
So you just kind of log in, and we have done integrations to ensure that your portfolio can be bought, can be imported and brought to ED Money seamlessly with your consent. And it triggers a report. The report actually has everything, and then that report you can actually forward it or upload it, and it actually brings in everything altogether. So so I think there is this whole personalization piece that I was talking about, right? Now that does multiple things. That actually engages the user, ensures that users are actually moving into the funnel also, and that actually has created like a huge impact in terms of our business, because our sign up to a user transacting ratio is like 2 to 3x of the competition, right? And our transaction to repeat transaction ratio, that is also 2 to 3x. Like when I say retention, like almost 45 to 50% of our transacting base actually transacts every month.
Okay. Highly engaged.
So it's engaged, and these engagements are not like low value or frivolous engagements, right? Which is like watching a video. Like I'm not just watching a video, which is these are like real transactions being done about growing your money. And these are not like small transactions, like not a 10 rupee kind of transaction or 15. These are transactions in thousands, right? And the other impact that it has on our business is that every year the average ticket of the investment is actually rising. So I think there are like multiple second, third, fourth order benefits. And that makes the whole business also much more like efficient and more scalable. And that can only become when you're solving a lot of consumer frictions.
What is the current average ticket size? Investment average ticket size?
It's 22,000 right now. So like on an average, right? So it's pretty good.
Yeah, it is. It is extremely.
And in a year, a user invests anywhere between 1.2 to 1.4 lakhs on e-money. So once you've started your journey, then you will keep on continuing, right? So our average AUM has grown significantly also per user. So from a business perspective, we have this amazing set of things that have come together. There is an external turbo engine that is tailwind in the market, and because of our product capabilities, we are actually able to ride on that. Like if we actually started building right now, then we would have not. But because that underlying principles that we need to focus on consumer outcomes, focus on providing unbiased advice, and that is actually helping us to ride on that way.
So, what is your path to like profitability? Like currently, how much of your transactions happen which are monetizable? Like which means that insurance or lending, and how much time do you think it'll need, and what is the roadmap there? Like,
sure. So, firstly, what is happening is that at least our marketing money that we invest is actually paid for by the insurance and lending business. So it's like a very simple economics out there that if we make enough money, we can actually invest enough money. So it's like that. So like our marketing budget is decided by our revenue.
Okay.
So it actually ensures
that's like an internal call you've taken to ensure discipline, that you don't spend what you make on marketing.
Yeah. And we're not compromising on our growth targets, right? So I'm not saying that. But I think the future is about, as I said, the future is about moving beyond transactions. We launched a product called Genius last week, 9th of Feb. It's a subscription. It's a membership which actually gives you access to very strong investing strategies, which are personalized to you,
like direct equity or mutual fund.
So there are a few things that we actually learned during our journey, right? We said that, okay, we have to move towards making consumers smarter and actually helping them take right decisions. And so I remember I was talking about this whole problem of you have so many products, state of confusion, right? And that state of confusion leading to like wrong actions or no action. In that, what we realized is that one big gap in the space is about there is zero personalization, right? Like a mutual fund that you are buying is exactly the same mutual fund that anybody else is buying. And when it is not personalized, what happens is you end up actually getting confused more. Like it is if the market goes up or the value of that investment goes up, and it is not personalized to your risk appetite, you will actually take a wrong call. So what GS does is it actually first helps you understand your own personality, which is via which is via investor personality assessment tests that we have done.
Yeah, like risk appetite and duration and stuff like that.
It's like that, but there also, I think the usual way has been that people ask you like 3-4 questions, right? And based on what is your mood, you become an aggressive guy or you become a conservative guy. And imagine that your recommendation is based on those 4-5 questions, right? We said that if the recommendation of where you should be investing and how much is dependent on such an important aspect of a personality, we actually work with a company called Stint, which is based out of UK, which is a specialist in behavioral finance. So they have a lot of models which actually predict with high amount of accuracy what kind of person are you, and there are 3 components to it, that what is your aversion to loss, or how much loss can you bear, right? What is your level of confidence in your decisions that you make when it comes to money? What is the financial understanding that you have? Now, basis these 3 aspects, it gives you a risk score, and then it actually says that okay, and there is a range to it, that a risk score is not like one number, because you as a person are not one number. Like based on your situations, you'll be acting very differently with you. And then it recommends that as Akshay, if you are a strategist, which you are open to actually do research and then you actually take decisions in life, it recommends you a investing strategy which is personalized too. So and it factors in the time horizon in that. So now how much. So it actually recommends you investing strategy which has how much, which gives you a percentage that you should be investing in equity, in domestic equity, in international equity, how much in debt, and how much in gold, which is called asset allocation, right? Now the big insight around asset allocation is that if you really look at your investment, people are chasing this multi-bagger stock or something very life change. Like literally that's what. It's a greed or FOMO or whatever you call it. The disproportionate rewards that I talked about, right? People actually want like $10 or 10x ho gaya. There's this whole chase, right? People are having. But imagine in your portfolio, if a stock has grown by 10x, right? And if it is just 1% of your overall investment, even if it runs 20x, right? You're not going to actually make any needle moving impact, right? But with the investing principle is that if you had 60% of your money in equities, right, you would make far more money than that multi-bagger, right? Because a percentage of your portfolio into equities decides your returns. And that's the principle behind asset allocation. And this is what I think world over, because the best of the investors in the world have always asset allocated and created more money. Right.
So do you actually execute also, or do you just give a report saying that this is your allocation that we recommend?
No. We execute also. Absolutely. Like, so we give you a recommendation.
If you're saying equity, then do you pick the equities also?
Yes. So, it gives you strategies that, okay, if you're a strategist, you have a horizon of 10 years, right? You can bear more volatility or more risk. Then high growth is your strategy, recommended strategy. Inside that, you should be, say, 80% in equities, 10% in debt, and 10% in gold, for example. Inside that, you have 2 ways to execute that strategy. One is via mutual funds, and one is via stocks and ETFs. So inside equities, in mutual funds, you will have all these equity, debt, and gold represented by index funds. So we don't actually do active managed funds, index funds that actually lowers cost and increase. And in mutual fund, we go one step ahead and tell you how much in large cap, mid cap, and small cap. And that is also index based. So it's more blow down. So you get a very well diversified portfolio. That is one outcome.
And again, you will also recommend in large cap this, in mid cap this fund.
Yes, exact fund. I'm saying, see, the problem with the whole world around all these advice is that, as you rightly pointed out, it's not implementable. If I give you all the GAN around asset allocation, can you actually do it?
No, not at all.
Not, right? So there has to be a system. So that's what actually Genius simplifies. It gives you an asset allocation, which has traditionally never been available to retail consumers like you, right? And that is the power of technology that it brings in. Then it recommends you how much you should be investing, in which fund, in which stocks. And stocks may, it actually tells you top 8 stocks also of the of investments there, and in what proportion that you should be investing.
What is the cost of this subscription?
So the membership actually costs you 249 rupees a month,
which is extremely reasonable.
Which is extremely reasonable, right? And the second thing that it does is that today you can be in the perfect allocation, right? Basis the market. But what if the market signals have changed? What do you do then? So it gives you monthly rebalancing, and that is a simple 3-tap experience. So Genius is actually understanding the global markets. We have integrated with close to 11 data vendors across the globe to actually understand what is happening. Is the market, how is the price movement in the market? What are the interest rate scenarios? What is the multiple factors that actually, and then recommends you. So every month you get a rebalancing option, which you can tap and get to your best allocation. And that's why it is like a continuous exercise. The underlying principle is what I think the best of the investors do, right? Like Warren Buffett's 2 rules of investing has always been that never lose money, right? And the second rule is to never forget the rule number 1.
Yeah, wow. Okay. I hadn't heard this, but this is amazing.
Okay. So Genius is geared towards actually ensuring that it keeps on minimizing risk versus actually a principle which says that keeps on maximizing returns. So the idea is that if you minimize risk, your returns will always obviously be higher.
Is this also what's called a robo-advisor? That in the US, there are these robo-advisors through which you can invest?
Yes. In a way, yes, definitely. It's very, very close to that, right? So there is Acorns, which has this similar kind of service and well simple in the Western world. There are like tons of services which have scaled to like a multi-billion-dollar opportunities. But so I think this is what the second thing that it does. It actually understands how you need to keep on rebalancing and keeps on reducing risk as you move forward and increasing the returns. And the last part is that with our backtest of this, whole strategy, it is proven to actually give you close to 1.8x higher returns, close to an 80% higher returns over various, periods of time, and than the benchmark, and also protected you additionally by 40% when the market is, deeply corrected. So I think it's actually fits into the whole consumer segment, which has a lot of products, who is confused about what to do about it. And it actually is not like something that it's not a black box. Like you just invest and it goes away and then what is going to happen. It's not like not putting money on autopilot. It involves you, but makes you feel that is the right thing for me to do and gives you that confidence, right? So yeah, we have launched like only on 9th Feb. So it's been
so this is like a pretty big bet on the path to profitability, right? Like this could,
yes,
because it is priced in that way where it would have a more mass appeal.
Yes. And the remember the principle that I talked about, that whole ecosystem is geared towards, not aligned to you, right? Now in this 249, we are not charging you for transactions, right? We're not taking any commissions because underlying products are there. So you have unlimited access to those strategies. You have unlimited transactions that you can do. There is no cap on investment amount.
Yeah. You have no incentive to recommend A over B because of some commission or any such thing.
We said that we need to remove this from our way of building the business itself. The moment you actually take that stance, and the beauty is that now everybody in ET Money is geared towards really delivering those. Like that's our now business model, right? So it's like completely aligning, and obviously it also has to actually deliver value which is beyond transactions, because so it actually goes into what we believe is going to be the future, aligns ourselves completely to the consumers from a strategy point of view. And kind of third thing that it does, it gives us a very unique position in the landscape, right? So that's definitely a big bet.
When did this go live?
9th of Feb, like last week.
Okay. And what kind of traction are you seeing?
So on the first day, we saw a subscription getting bought or a membership getting bought every 5 seconds. It was, and I think it seems like, while it's too early, like it seems like a very good fit to the audience that we are chasing, which is not like a very, very early or low income.
Absolutely.
Fitting. Our sense is that there are at least 5 billion those set of users in the market who have this burning problem, We need to figure out a way to, and we also have a huge base, right, which can quickly upgrade. So I think it's worked out. It's too early, but the signs are like super encouraging.
Yeah. Is there any other company which is doing this, like a robo advisory in India?
Not really. Like the way, probably the way we are actually built it. In fact, we over a period of time realized that there is no precedence in either the Indian market for this product or even the whole dynamic asset allocation model that we have in the world. It was very kind of like it keeps on changing your asset allocation based on market signals every month. Like all the other, advisories have been putting you into a fixed number that 60 hai, then 60% in equity will continue for like another 5 years. So the whole dynamic thing is, and that gets bundled with rebalancing becomes like, and the third component of it being hyper personalized, right? It's geared towards Akshay only. Like Akshay's investing strategy, even if say, Stuti gets it, then the investing strategy could be the same, but the proportions in each of them of equity will be different. I think these three pillars are there, which are actually probably hitting the node with the audience.
So, like by 2025, what kind of revenue do you see ET Money doing? By revenue, I mean not like the asset investment of the direct plan, but like what you would be earning.
And we are gunning for close to 600 crores of revenue by 2025. And I think it's not my personal stretch targets. So I think we can get there.
And what will be the split of this? How much from Genius membership sales? How much from insurance? How much from lending? These are the three sources of revenue, right?
Yeah.
Like insurance, lending, and Genius.
It has to be primarily Genius. So I think, and there is a clean shot at it for us from where we see today. It's a unique space. Nobody has gone for it. We have a huge base. We will double down aggressively.
Yeah, that would mean like how many Genius members would you be estimating by 2025?
Close to 2 million. So and that seems like a possibility. Obviously, it will need those kind of investments as well. And I think at a cumulative number, if we can hit that, I think we are home.
Yeah, broadly, I think anyone earning more than 1 lakh a month is a potential Genius target, right?
Yes. And also one of the experiments that we are running is that are new to, investing users also going for Genius. And surprisingly, it's like a lot of people, because they do a lot of research, are actually understanding that this is a great way to also start, not like really kind of way. So I think if it becomes like a great way to actually even start your first dollar or first 1,000 rupees into investing, that would be like a great unlock for the consumers also and for us as well.
Yeah. Genius would also be relevant for like the tax saving janta. Like there is that whole audience which comes in March to invest so that they save tax.
Yes, absolutely.
Because tax saving, in tax saving, you have limited options, right? Like, or would you then within those options figure out what is the best asset allocation?
Eventually, we will figure out for sure, because that's one big area that happens that everybody starts their investing journey with taxation as a
Yeah.
But what we realized is that while there is this whole chase of actually saving taxes, which is there, but on a like if the investing strategy has to be tax optimized as well to actually ensure that you have. So we will definitely, this is the first big step that we have taken, and Genius will continue to evolve into like rapid value additions over a period of next 12 to 24 months. A lot is there to come.
So like if I have 5 lakhs to invest, then Genius will ensure that the tax optimization happens in terms of that 1.5 lakh going towards tax saving instruments.
That, yes, like that's the evolution. We don't provide it today, but that's the most logical evolution that we can. The only challenge is that if you have tax saving, say for example, mutual fund, then they are locked in for 3 years.
Yeah. You can't rebalance. Yeah.
So we need to actually figure that out. But I think, then if some component of it is actually, and the second part is there is no index fund around it, right? So that is another thing. So I think both the things have to evolve from a ecosystem perspective to have tax. But it's a great point actually. Yeah.
So while there is no competitor in terms of paid like subscription based robo advisor, but then there are these robo advisors which are offering investment where they make a commission, like there's Deserve and Stack Money, like these like wealth management apps where they
Yeah.
have a similar goal. So you are taking one call that, okay, we'll invest your money into direct plans, but we'll charge you a fixed subscription. And then they're taking a call that customers may not pay a fixed subscription. So we'll through
Yeah.
the commission. So what's your view on which of these theses will play out in what way?
I think it's very early. Like there are multiple ways to solve at it. Our reason, I can comment about our reasoning behind it, right? Is to say that if I'm commission led, then it's tough to be unbiased. It's not tough, it's just impossible, because at some point in time you asked about 600 crores, right? What is if I have to earn like 500 crores, I have to maximize my revenue. What will I do? I will say, okay, this is the product which gives me high commission. That should be part of my recommendation, right? So I think it becomes kind of challenging at scale to be unbiased if you are commission led or purely transaction led, I think.
If you like the Founder Thesis podcast, then do check out our other shows on subjects like marketing, technology, career advice, books, and drama. Visit thepodium.in, that is thepodium.in for a complete list of all our shows.
Before we end the episode, I want to share a bit about my journey as a podcaster. I started podcasting in 2020, and in the last 2 years, I've had the opportunity to interview more than 250 founders who are shaping India's future across sectors. If you also want to speak to the best minds in your field and build an enviable network, then you must consider becoming a podcaster. And the first step to becoming a podcaster starts with Zencastr, which takes care of all the nuts and bolts of podcasting, from remote recording to editing to distribution and finally monetization. If you are planning to check out the platform, then please show your support for the Founder Thesis podcast by using this link, zen.ai/founder thesis. That's zen.ai/founder thesis.